Hey folks, Shawn Plummer over at the Annuity Expert. In today's video, we're going to answer the question, should I put all my annuity money into one contract? Flat answer is no. Well, it depends on how much money you put into that you're buying an annuity with. So the reason why I bring this up is we get folks who put in $50,000 into an annuity, and we have some folks that put well over $1 million into an annuity. And my recommendation in most cases is find out what your State Guaranty Association limits are and divvy up your annuity money into contracts that are fulfilled by that State Guaranty Association limit. So if you go here to NOLHGA, NOLHGA, you can find your state's guarantee association. So contact my guarantee association, and we'll include this link in the description. But and for those of you that don't know what a state guarantee association is, it's the insurance company's version of the FDIC. Not the same as the FDIC, but pretty similar to it. So a lot of the states, so in order to sell an annuity in all 50 states, you have to go by their insurance company's rules and regulations. And you have to you have to put money into a fund, the state guaranteed fund, in case the insurance company goes out of business, which is rare. But if you did go out of business, the SGA would be able to fulfill those contractual guarantees that you purchased the annuity for, which are legal contracts. And most of them are about $250,000 per person per contract. So for example, if you bought a $500,000 annuity with one company in the state of Georgia and $250,000 was the limit and the company goes out of business, well, the State Guaranty Association will only fulfill the contractual guarantees up to $250,000 for that annuity for that person. For that amount of money. So the other 250,000 kind of lost, right? Which stinks. So what I typically say is have one person on one contract with one company for 250, if 250 is the limit, and then do the same thing with a second company and another with a third and a fourth, and just divvy it out just in case between now and the next 20 or 30 years that you're going to be covered in case the insurance company goes out of business, goes insolvent, right? And that your contractual guarantees are. You're going to find similar interest rates. You might get a slightly lower income or slightly lower growth because you're divvying it out, but the peace of mind is worth the reduction, okay? So what we recommend is go to NOLHGA, or you can go to Google and type in your state Guarantee Association. So for example, I'm in Georgia and I'm going to go to Georgia Guarantee Association. We pop up here. We go to frequently asked questions. That usually gets your questions answered. And then you're looking for a question, how's the policy, who is protected, who's covered. Okay. So here, if you've bought an annuity no, you don't want that one. You want this one. Post July 1st, 2020, because we're in 2026. You look down here and $250,000 per insured life. Okay. Or, so if let's just say you're buying an annuity, a fixed annuity, a fixed index annuity, variable annuity, and you're growing it and the insurance company goes out of business. The cash value, that's basically your account value of your annuity. They'll cover $250,000 per insured life, right? If you're in payout mode, meaning you've annuitized the contract, they'll cover $300,000. So if you were getting paid, if you had an annuity that was over that amount, you wouldn't be covered. So you want to split it up into multiple companies, which really leads into the next conversation is, a lot of this you could avoid if you just focus on a company that's A- or better with AM Best and that has been around for 50 plus years. If you stick with that and avoid the B-rated companies, you've mitigate your risk even more. So yeah, split it up among several contracts. Yes, it's a hassle to fill out multiple applications, but like us here at the Annuity Expert, we fill out one application and we apply it to the other applications. And then once you're done, you're done. And then you have several different contracts and you mitigate your risk even further. It's kind of the same deal with CD rates. So we have staff that updates CD rates from like 500 banks. And what we say here is we recommend any bank or credit union on Raisin, as most accounts on the platform require only $1 to open. This way, the low deposit limit allows you to spread your risk among several financial institutions rather than having all of your eggs in one basket, right? So the idea behind that is you're lowering the risk of losing money because some insurance company, or in the case of CDs, bank or credit union, goes out of business, right? And then you're less likely to be hosed. So what I would recommend is go to your favorite search engine, Google, Yahoo, Bing, type in the Annuity Expert. You're going to go here, interest rates. You're going to look at your fixed annuity rates here. So these are your guaranteed interest rates. And then if you want income, you go to your calculators, retirement-based calculator, annuity calculator. You scroll down here and you're able to see what your payouts are in real time. Okay. And then if you will go to your fixed annuity rates, we update this. Insurance companies are closed on Saturday and Sunday. So April 17th, we'll have this updated today, April 20th. And you'll see what your top rates are. And then we'll have a table so you can do your research and you can look at what your annual liquidity is, when it's established, the rating, et cetera, right? So here are our top recommendations. Here's this. But if you have any money north of $250,000 or whatever your state, some state guarantee associations, by the way, will go up to $500,000. Last time I checked, that could have changed, but just look what that limit is and just split up your money into contracts that SGA will fulfill. And then you could go to bed sleeping knowing that if something happens, you're going to be covered. So I hope I answered that question appropriately. If you have any questions, come visit us at the Annuity Expert. There's no obligation. And if you want to leave a comment, leave a comment. Be as accurate as possible so I can return an accurate answer. Okay. And I can do that within a couple of days. And then if you need any kind of quotes, we're here to help you out. Hope all is well. We'll talk to you soon and we'll catch you on the next video. See ya.